Hi, I'm Tony Lacantro. I'm an investment manager at Alto Capital, and I'm joined today by the Managing Director of Calima Energy, Alan Stein. Hi Alan, nice for you to join me. Now, Calima Energy is an interesting junior oil company trading in the mid-fives. So provide a brief intro, Alan, of Calima Energy.
Okay, thanks Tony. Look, Calima is junior oil and gas company. Major project is in British Columbia in Canada, in an area that's considered very prospective for the Monteny Formation. Monteny Formation's currently the biggest oil and gas play in Canada, and it's a very exciting place to be operating.
Yeah, I believe you're presenting at the RIU conference, and more importantly, you're actually the coffee sponsor, so you're going to get a lot of attention.
Well, we certainly hope so. Please come and see us and we'll be sure to fix you up with some very nice coffee.
So you're actually presenting on Wednesday afternoon, I believe?
Yeah, towards the end of the day on Wednesday, yeah.
I think it's a good time for oil and gas because we've had the Carnarvon discovery, which has set the sector alight, and we've also seen some upward pressure on the oil price. Now tell me about some of the potential catalysts for Calima Energy.
Well look, as I said, the Monteny is the biggest play in Canada at the moment, and it seems that the temperature is rising there as well. We're seeing very, very strong demand for condensate in that part of the world because they use it as a diluent for the heavy oil play in Canada, which is a massive play. So the condensate's trading at a premium to WTI. Gas prices have been a little bit soft in Western Canada, but I think the thing that's catching people's imagination over there is the arrival of the first of probably several LNG projects on the west coast of Canada. That opens up the Monteny to an international market. Monteny gas molecules will be moving into an international market for the first time, other than the lower 48, of course. And it means a different pricing mechanism as well. So as a consequence, we've seen prices paid from Monteny land almost double from last year to this year. So currently, the average price for undeveloped Monteny land is around $4,500 an acre.
It's quite a competitive market now. I know there's quite a number of companies presenting. What differentiates Calima Energy from some of the other oil and gas exploration companies?
Well look, let's look at a number of the things that you need to look at if you're considering an investment in a junior oil and gas company. Number one, management. Well, the management team at Calima have been together 18 years. This will be the third company that we've built together successfully. The first company was Fusion Oil and Gas that had discoveries offshore Mauritania. We sold that business and we started up Ophir Energy. We had discoveries in Equatorial Guinea, we had discoveries in Tanzania. And by the time we listed that business in London in 2011, it was the biggest E&P IPO London had ever seen. And when we left the business in 2012, had a market cap of 2 billion. So in terms of the management team, we've been there and done it, so let's give that a tick. In terms of the scale of the project, it's always exciting when smaller companies can get their hands on a large-scale project. And we're fortunate that we were able to get into Canada early and we bought the acreage very competitively priced before there was a lot of attention on it. And look at the scale of the resource. We have an independent resource report that ascribes 475 million barrels of oil equivalent to the acreage that we have drilling rights over. And that's made up of about 2.1 TCF of gas and 115 million barrels of liquids. And remember, it's an unconventional play, so it's not exploration in the true sense. It's a basin-saturated play. We know the hydrocarbons are there. We just now need to drill the wells to demonstrate that we have the productivity.
Alan, I believe you've just raised $25 million in a really difficult market. What does that mean for Calima?
Well look, it means we're now fully funded to go ahead and drill the project. So starting in December, we're going to drill 3 wells. It will be a vertical well where we'll collect a core, do our stratigraphic correlation, and 2 horizontal wells, 2,500 meter horizontal wells, which we'll put on an extended production test, which will help us demonstrate the productivity of the drilling rates that we have.
Oil and gas exploration is one of the highest risk activities a junior can do. Now, Alan, what are the chances of success with this drilling program?
Well, look, we're very fortunate that we have a company next door to us called Saguaro Resources, which has become one of the leading producers in the Montany. So they're immediately next door on the other side of the river, and they've now drilled 62 wells into their acreage, and all those wells have been successful. This is not exploration in the traditional sense, this is an unconventional basin saturated play. So we're actually drilling into the source rock where the hydrocarbons are in situ, so that it doesn't carry the same level of risk that you would have in a normal exploration play.
I think Hardman was proof that a junior oil company trading around 6 cents can do it. They made a huge discovery and got taken out for a significant premium. And I think the good thing about your story is, as you said, you're well managed and you have huge upside potential. And thank you for joining me.
Thank you.